Have you been asked to calculate the variable cost per unit when you're given the number of units and the total absorption cost per unit and need to know how to do that? Well, you've come to the right place because I'm Professor Capko and I'm going to show you in today's video how super simple this is. But first I want to say something wonderful is about to happen for you, so be on the lookout for it. And now back to the video. In this example, we're going to compare absorption cost versus variable cost. This is all part of managerial accounting, or sometimes called cost accounting. And we're going to show you what the differences are. So in our example, we've got Capko Inc. manufactures the latest, greatest in thing. They manufactured 9,500 units in November. By the way, I've taken this example and used it to calculate the absorption cost per unit in a prior video. So if you missed that prior video, I've linked it up here for you. You may want to check that one out first. Now we're looking at is included in that cost $26,125 of fixed manufacturing overhead. The total absorption cost per unit is $8.75. And the question's asking, what is the variable cost per unit? Well, first we need to understand what the difference between absorption cost and variable cost is. The key difference between those is the inclusion or not of fixed manufacturing overhead. Absorption cost includes the fixed manufacturing overhead in the per unit cost. For example, here's the formula for it. It's going to show you that its absorption cost is the direct labor plus direct materials plus the variable overhead plus the fixed overhead for that time period. In this case, we're looking at November. And we're going to divide that by the number of units produced in that same time period, in this case, November. That would be the total absorption cost. And then that would be per unit because we're dividing by the number of units produced. For variable cost, the only difference is we do not include the fixed overhead. The fixed overhead would be just expensed directly to the income statement. So we need to remove the fixed overhead from our calculation to figure out the variable cost. Now, if you were thinking about how the impact of that is, if we are using absorption cost, then all the fixed overhead for the manufacturing would be included in the cost per unit. And if some of those units are not sold at the end of that period, they would be part of the inventory that's available for sale, or the completed inventory. So we're taking that fixed overhead and we're putting some of it into each of the unit's costs. So it would actually increase the inventory, which is an asset. Inventory is an asset, so it would increase the amount of the assets. Also, those costs would not be immediately expensed. So that would decrease the amount of expenses for your income statement. So if you're decreasing expenses, then that would be showing a greater income than in variable costing. However, when you do sell the units, the cost of goods sold would include the fixed overhead. So at that point, you would then account for that fixed overhead and your cost of goods sold would actually be higher than under the variable cost scheme, and therefore your gross profit per item would go down. So this difference is accounted for by the difference between the variable cost per unit or the absorption cost per unit. It's important to know which one you are working with. So in our example here, we are told the absorption cost per unit is $8.75 per unit. That is the total cost, including the fixed overhead because that is the absorption cost. We want to figure out what the total costs are for November for manufacturing. So we're going to take that cost per unit and we're going to multiply it by the 9,500 units that were manufactured. This is $8.75 per unit, and we're multiplying it by the 9,500 units to get a total cost of manufacturing. I'm going to use my BA2 Plus calculator here. If you want a calculator like this one, I've got some of them linked in the description down below. So I've got $8.75 per unit, and I'm going to multiply it by the 9,500 units. So we have a total cost for the manufacturing is $83,125. Now that includes the direct labor, the direct materials, the variable overhead, and the fixed overhead. We want to figure out what the variable cost per unit is, and we know that the variable cost per unit does not include the fixed overhead. Luckily, the problem tells us the amount of fixed manufacturing overhead is $26,125. So we're going to remove that from our total cost. So I'm going to subtract from that $26,125. So I've got the $83,125, subtract out the fixed overhead, and that gives me variable costs of manufacture of $57,000. That's the total of the variable cost for November. Our question is asking us the variable cost per unit, so I'm going to take that $57,000 and I'm going to divide it by the 9,500 units that were manufactured. It's already in the calculator, so I'm going to divide it by 9,500, and that gives us $6 per unit as our variable cost per unit. So I'm going to put that here, $6 per unit. That's our variable cost per unit. So you can see our absorption cost per unit is higher, as we'd expect, because that includes the fixed overhead, and that is higher than our variable cost per unit, which is only $6 per unit. So our cost of goods sold when we sell these units will be lower here with variable cost and higher with the absorption cost. That's all I have for you on this today. For the thumbs up on that, it really helps the channel. If you know of others that could use help with this sort of thing, share this video with them. Also, you may want to consider joining the channel. There's some perks for members of the channel. There's information about that down below. And if you want to see more videos like this, please subscribe and hit that notification bell so you never miss a video. Thank you.